So we're on with Kashif and everyone. Dotun is here, Carl Evans and Amey Rajput. I'm going to go behind the scenes and in the backstage. Let everyone join in as well. Meanwhile, Kashif, you can take the pleasure of introducing yourself and let others introduce before you start off the panel. I'm going to be in the backstage. Thank you.
Thanks a lot, Abhimanyu. And today we have an amazing panel with us. And first of all, thank you very much, Abhimanyu, for holding an event Incrypted Asia 2021. I've been seeing from since yesterday that there have been some amazing discussions happening on this forum, and these kind of discussions are like very important. We gain so much knowledge from these forums, and especially for beginners who think that whenever they enter into this space and they wonder from where to learn about this industry. So here you are. These are the forums where you need to just log in and just need to hear it out. Even if you are not able to join it live, you can still watch the recorded version of these forums, and from here you will get to know so much about the industry and so much happening around the world. And we have some amazing panel today. First of all, the topic for today which has been assigned to me is the US regulator has recently what they did is like US regulators says that banks can use stable coins, they can connect to blockchains. So how this is going to facilitate cross-border transaction first. And today with me to discuss about the this recent development in US, I have Dotun Rominiyi. So I hope I have pronounced the right name. Now let me tell you more about Dotun. Dotun is a blockchain and innovation strategist at London Stock Exchange Group, right? And he has got a 15 years of experience in product and technology, and he has been an expert leader in blockchain, fintech, and video gaming sector. Plus, he's the founder of Paradia.io. And then we have Carl Evans with us. He is a marketing leading cryptocurrency lawyer and strategy expert. And he is also an author of the Little Book of Crypto, which got published in 2019. Plus, he is a writer, award-winning speaker, and top 5 independent cryptocurrency compliance expert. Wow! So I need to actually get in touch with him after this as well. So need to discuss this. And he's also an advisor to Estonia, Malta, and UK blockchain technology task force. So, and then we also have Amey, and he's from Tech Mahindra, and he's general manager there, and based out of Bangalore. And he's been working on Hyperledger. He has been leading the blockchain and the digital asset space and the research space on from Tech Mahindra. So welcome, Amey. So I will start my question first of all. So this was the introduction. So I will start it from Dotun. I will start this panel from you. I'll come straight to the question. Recently, we have come to know that banks in US can connect to blockchain as validator nodes and thereby transact stablecoin payment on behalf of customers who are increasingly demanding the speed, efficiency, interportability, and low cost associated with these products. So my question to you, Dotun, why you think that the United States of America felt the need of doing it as this move surprised many all over the world. Many were surprised that the OCC allowed the banks to deal in the public blockchains and they can make use of stable coins. So my second question is, what impact it will have on the other countries? So other countries who are trying to figure out this industry, they're trying to understand this industry, what impact it will have on the other developed and underdeveloped nations, and how this is going to disrupt the cross-border payment.
I think it's an excellent question. I mean, maybe to start with, just looking at, I suppose, the announcement. I mean, I think it's obviously, set an interesting precedent for this space and for this, for financial institutions all over the world, but specifically in the US. It obviously opens up a lot of opportunities for retail banking engagement with digital assets and cryptos specifically. I think it's probably more valuable for some of the larger and more prominent solutions in the space, like, for example, Libra or DM as it's now known, just in terms of potential opportunities there. But I think even separate to that, when you look at kind of the breadth of the stablecoin space, specifically when you look at kind of fiat-backed tokens, it opens up a lot of opportunities for technologies such as finality, which is maybe more European centric, but also USDC, which is another interesting one. It opens opportunities for similar types of let's say financial industry led infrastructure developments. They're looking to bring DLT into the space and enable things like tokenized depository accounts, essentially, and kind of bilateral settlement between financial entities in terms of wholesale transactions. So I think there's a lot of opportunities there in the wholesale space that this kind of opens the door to in the US. And I think similarly, you'll see a lot of innovation across Europe and across the rest of the world, focusing on some of these key areas. I mean, I think what's probably obvious to everybody is payments infrastructure at the kind of most systemic level has been very, very slow to evolve. And I think really the OCC announcement is trying to kind of open the door to innovation and bring innovation into that space to allow some of these nimbler, smarter, more agile, more innovative solutions to come in and really push the boat out, really, and really push the landscape forward. So obviously, it will take time for large institutions to adopt some of these technologies. There are lots of considerations that they need to take into account in terms of information security and cyber security, in terms of resiliency and liability, around the assets that they may hold on behalf of customers. Cross-borders is an interesting one in the context of cryptos because ultimately the technology specifically for public chain solutions is already natively available to the end users. So it's the role of banks as an intermediary there is somewhat questionable. But I do think there's a large opportunity for some of these banks to provide, based on, well, at least led by client demand, services around deposits for crypto assets for savings and investments. And I think that will be an interesting area of exploration for some of these institutions to really move into. I'll stop there.
Kashif, you're on mute.
So, Dotun, do you think that it is going to disrupt the cross-border payments? It is going it is going to disrupt the way things have been. We have been doing the cross-border payments as on today. The way SWIFT is working, the way we have Fed via ACH. Do you think it is going to disrupt it?
I think it's interesting. I think it really depends. And it depends on the scale of adoption for some of these currencies. I mean, I think the challenge, obviously, with introducing a third currency into the mix when you're facilitating cross-border payments is one of exchange risk and potential liquidity risk. So I think that there's potential for that, but it really depends on.
Okay. Now, my next question is to Carl. Carl, this is for sure that this move essentially puts blockchain network on an equal level as global financial networks such as SWIFT, ACH, and FedWire. So we already have these payment networks. We have already SWIFT, we have already ACH, we have already a FedWire. And now if the US government is, when they're trying to accept and acknowledge public blockchains and they're trying to accept and acknowledge stable coins, do you think that they are putting public blockchains at par with the existing financial networks, number one? And do you think that in future, whenever they will try to form a financial policy around, or a financial policy around the existing, financial system they have, so they cannot ignore stable coins and public blockchains in future, and whenever they will make a policy in future, they will try and include public blockchain and stable coins in near future?
Yeah, thanks, Kashif. Great questions. Look, I think I'm actually going to answer both of those kind of in one for you. The current US networks, I mean, I think it's no secret that the current US banking networks lag massively behind if we look at the European networks and the protocols that they deploy. And I think when we look at stablecoins, what we're really seeing here is the US's attempt at playing catch up in a technological sense, and almost from a regulatory sense as well. Now, if we think about it logically, we look at China that's already released their own national currency. And we know from the latest COVID bill, in fact, 2 of the COVID bills that have gone through the Senate over here, in fact, the Senate and the House over here in the US, that they're pushing, they being the US government, is pushing for a digital dollar to be created. And so what the feeling over here is this kind of adoption of public blockchains and allowing banking institutions to use blockchain is because we know that down the line there's going to be a digital dollar. And so rather than letting banks play catch up, banning them from using blockchain tech, then introducing a digital dollar which will use it, and then having them play catch up, the US government is actually doing it the other way around. They're legalizing the technology, and then the US government will create its own version of it. And effectively, what that means for payment networks, such as, if we compare it to something like the SWIFT, it'll create a whole new payment network, which, in theory, would bring the US banking system on par with other locations that are using their own digital currency. And I think that's a really interesting thing to see. From a regulatory point of view, the US is actually kind of for once getting themselves together, not in terms of user adoption like we've seen with, legacy coins, Bitcoin or Ethereum or altcoins or anything like that, but actually from this very top level perspective, they're kind of opening the door so that banks are going to know what they can do when this digital dollar comes down the pipeline.
Okay, so you gave a very a good example of China. So my next question because since China is our neighbor, so China is very close to, and whenever we do something in India, we always try and compare it with China. So Amey, Mr. Rajput, I have a question to you. I mean, now China is doing so much in terms of digital yuan, and they are progressing so fast in digital currency and electronic payment. DCEP was what they call it, or we call it as digital yuan to make it simpler. They have been conducting pilot programs, and they have already declared that in future, they will interact with public blockchains. They have in fact announced that they will interact with close to 40 blockchains, public blockchains in future, and they are open to it. So what stops India? You must have heard that recently in the past, India has categorically said that they are not in favor of private blockchains, in private in the sense which is not backed by the government. So they are only concerned about the blockchains or the currencies which are backed by the Indian government. So do you think this attitude, of secluding yourself from the world, or closing the doors for the world and trying to build something of your own is a successful strategy? And you at Tech Mahindra, what are your plans? Do you ever interact with the government and try to explain them the benefit of public blockchains and how it is going to help India overall?
Great. Thanks so much, Kashif, for asking that question. So I am actually working with a few regulatory bodies and the research institutes. Right. For example, ITBRT in India, which is the research institute of RBI, right, our own bank, Reserve Bank. And what challenges I see from their perspective is the ability to have understanding of the public blockchain. It's very little in terms of the decision makers. The operational folks, yes, they understand it. We've been doing a lot of knowledge sharing sessions. We're doing POCs, pilots with these kind of organizations. But unfortunately, when it comes to a decision making capabilities, the concept of not being able to control something that is going to mint money is kind of a challenge for people to accept at this moment. While I do agree, China is doing great work, and I was so happy when US also, the OCC also, called this out, because some of my discussions with the Securities and Securities Board, the SEBI in India, with their CIO teams and their regulatory organized teams, what I've understood from them is, they are open to do these innovations and see how more and more wealth is generated inside the country. but they would like the private sector to go and prove it out, right? There's a funny thing about it. When they said, when we see people started making money, we will come and make a regulation about it. So that's how that's how some of the thinking behind these decision-making organizations have. And I think because of what US and China started doing, definitely there are people inside of the government and inside of these decision-making organizations that are already thinking about, what's going to happen beyond the ban. The ban is because they don't want people to get fooled, or there's no fraudulent activity to people who don't really understand the technology, right? It's very difficult. So like I think earlier, earlier it was mentioned that we've been working on a large large private blockchain network in India with a regulator called the TRAI, which is the Telecom Regulatory Authority. While working with the regulators over there, what we found is they do understand the technology, and there has to be someone who's taking the baton and moving ahead and taking some certain leap of faith and going into the technology to implement, to pilot, to speak to people, and then come to a conclusion. And we've been able to get 20,000 businesses and 1.3 billion people onto the blockchain network. So definitely the RBI and their organizations are also thinking about it. It's just about them taking cautious decisions before coming out with the rule. But of course, it's definitely every startup, every business wants to get into it, and we are definitely looking forward to some decision making which is positive to the cryptocurrency world. And stable coins from OCC is a welcome. It is most welcome in this country as well.
Awesome, Amey. Cal, since you said that you're in California, right? And you are, understanding the regulatory space in US like very closely. I mean, since you're from a legal background, and you're also seeing that this space is evolving, right? My question to you is that, do you think that there is going to be a fierce battle between CBDCs and stablecoin? First of all, in the near future, you're going to see a fierce battle between, you have these stable coins where back like USDC, Tether, and the governments with their own CBDCs. We are going to see a fierce battle, and who, according to you, is going to win this battle in the near future?
Yeah, that's a really good question, and I've actually been doing quite a lot of work over here in the US with the SEC and some other state-led bodies as well, the state legislature in Wyoming, even the state legislature in California is now starting to play catch-up to a certain degree. And that's really the question on everybody's minds. I mean, if we look at what's happening with Ripple at the moment, as an example, it's really been caught in the crosshairs of a big kind of legal action that's taking place over on the East Coast. And will that impact really their ability to conduct business in the future? I mean, at the minute, it doesn't seem like it's done too much damage to their infrastructure. But ultimately, I think, look, the US has always prided itself on being a competitive market, right? This concept of open competition is always a healthy thing. And we see huge amount of anti-competition laws over here. And so to have the regulators shut down tokens like, we'll keep Ripple as our example, or even, USDC, if we keep in the stablecoin lane, to have them, to shut them down, I mean, the first question is this: look, can it actually be done? We all know, how the tech set of crypto works, how easy it is to plug in. Regulators love to think they can shut things down, and we see this a lot contrasting in India now as well. There's a lot of rules that may or may not be coming in around the shutting down of crypto. And what we have to see is, as a centralized digital currency is issued, which of course will be stabled, I think the biggest difference that we see is actually in their use case. The difference here is that, if we take, for example, a USDT or a USDC, they are backed. So what they're actually doing is they're taking a, segment of cash, and they're, holding that. In theory, I know there's a lot, we could probably talk about that for hours, guys, but they're taking a segment of cash and they're holding it. And that is what is backing the token, right? The difference is a centralized token is going to be issued. And here is the real question. is any government going to use this as an opportunity to go back onto the gold standard? Or are they just going to keep free flowing? Because we know the economics of digital currencies is completely different. We know that. And, you know, some people talk about the downfalls and the benefits of having a stable coin, a backed currency, and a free flowing currency. And the question is, what's the US government going to do with it? Are they just going to, is the printing machine going to keep going with the digital currency like it does the fiat currency? Are they going to cap it? Are they going to artificially control it more? We actually just don't know. And we can make some guesses, but, you know, again, another conversation for another time. But I guess to go back to your question, look, do we think they're going to compete? Absolutely, they're going to compete. But I think as a user of these, I think there's very different use cases for both of these. You'll know from your work with the London Stock X that, you know, look, whenever you get into that realm of anything being heavily regulated, heavily monitored, and heavily controlled, you know, its price point is phenomenally different, but its use case is so different, right? You know, what you do with stuff on that back end, in a banking sense, in a financial sense, in a, you know, economies, is totally different to, well, yes, this is stabilized, but it's free flowing. You see very different use cases for both of those. So do I think they'll compete? Yes. Do I think there's going to be a winner? I don't, because I think both are going to have such very different uses.
So in a sense, you're saying that both are going to coexist, and both are, you know, they have their own space and they will continue to grow. And yes, stablecoins might eat into the share of the existing, you know, CBDCs, if so you may call it. They might in terms of people who like, say, decentralization, who are advocates of decentralization or crypto, might, you know, slowly and steadily they move on to the stable coins, which are like more decentralized on public networks rather than going on CBDCs. But you are saying that both can coexist in near future, is it?
Yeah, absolutely. And I mean, the only thing that's really going to die, and I'm a firm believer in this, is fiat currencies. You know, the reality of the situation is, there's no coincidence that the US government has printed more in the last 12 months than they have in the last 45 years.
Yeah.
I mean, they just don't care that the value of it is dropping. They know there's a shift coming. Everybody knows it. Economists know it. You know, intelligence architects know it. Everybody knows it. So, and there's going to be a big enough space for this. You know, all you have to do is jump onto any FX market to see how diverse an actual, you know, a market like that can be. We look at any crypto exchange now, we see how diverse crypto exchanges can be. There is a big enough market space for all of these to coexist and work together.
Right. I'll come back to you later with a very interesting question. First, I'll go to Dotun. Dotun, just tell me that since you're working as a strategist to the London Stock Exchange, how things are evolving in London? Because we recently got to know that FCA had actually, you know, they didn't allow the futures trading. I guess the futures and derivative, they said that it's completely no in London.
Yeah,
And
they banned trading in derivatives on crypto. Yeah,
right. And they also said that they have been tightening things up. So are they trying to create the balance, or you think that no, the London is more progressive and moving toward in the right direction? Like maybe in US, you're seeing that in spite of the fact that things are not clear in US, still things are going in the right direction. At least, like the banks are custodians. Now you see OCC, then you are seeing Visa making some really good announcements in near future, and MasterCard is also planning something. Are you seeing a similar thing happening in London, which is like a country where everybody looks at what is happening in London? What is your take on that? And can you just brief us about the developments in London?
Yeah, no, absolutely. No, I mean, I think I would say it's an interesting one, right? And if you look at some of the big moves that have been made in London, and I think it's very similar to the US in many ways. There is something of a view or perception, should I say, that they're trying to tighten things up. But I actually think the opposite is true. I think there's always a sense for the larger economies to take a firm stance on investor protection. And I think when you look at a lot of the innovation and a lot of the speed of evolution of the crypto space. Specifically, if you go through kind of the ICO boom and bust, right, of 2016 into 2017. I think what you see is a lot of development and growth on creating technologies that provide opportunities for investors and opportunities for issuers, but don't necessarily solve for some of the risks to some of the end investors, and don't necessarily protect them in some of the right ways. And I think, some of the moves that we saw, so for example, the FCA banning derivatives on crypto were very much that, in terms of trying to protect the end investors. But I think separate to that, I mean, we've seen recently the Treasury announced a task force in conjunction with the Bank of England, where they're looking at central bank digital currencies and anger. And what was surprising to us was that the focus, at least initially, is going to be retail. Just in terms of understanding, if they were to deliver a solution, what would that look like? How would it be shaped? And how would it be structured? What technologies would be most appropriate, etc. So no, I think there's a clear and a keen focus on this. And I actually think the mood specifically in the UK is one of trying to be even more competitive, especially kind of post Brexit now, where there's a little bit more room for the government to kind of steer the levers and try to kind of create a more regulatory friendly environment for some of these technologies. But I think broadly, we're seeing lots of movement in the wholesale space around payments, and as I mentioned before, solutions like Finality that are really kind of driving ahead in terms of providing technologies that can facilitate the equivalent of a synthetic CBDC, essentially, and that's working directly in conjunction with the central banks. Even if, when we look at the Bank of England, they recently announced some changes to their RTGS system that would enable fintechs to connect directly in and provide depository access, which traditionally had been reserved only for banks, very large settlement banks. So these are some of the innovations that are really coming through the chain. We've obviously seen, kind of inspired by the EU Commission's market infrastructure, DLT market infrastructure pilot regime, a push on the UK side to explore doing something similar. So I think there's lots of moves to really sort of move the landscape forward and really see how we can steer this innovation and evolution based on leveraging some of these technologies. I think we'll probably see a lot more growth and development in the wholesale space. Whilst it's heavily regulated, I think it's a little bit easier to navigate because of the fact that a lot of the controls and protections and regulatory compliance regimes exist today to protect the investors, and so it's easier to navigate once you have the necessary authorization to do so. And obviously you have the innovation sandboxes as well that can support businesses to really drive those solutions and bring them to market. And I think in the retail space it will just take longer in the UK and the US because the big markets. These are technologies to facilitate payments. Are systemically important, and so you want to make sure you get it right.
All right. So, Amey, thank you, Dotun, for answering that question. Amey, I have one question in my mind. I mean, you must be hearing to Kyle and you are hearing to Dotun and what the kind of developments which are happening in US, London, and China, and India has not even started, thinking about it. So, I mean, as you're working with Tech Mahindra, I am a huge admirer of Mr. Anand Mahindra, right? A huge admirer because if you go to his Twitter handle, he talks about new technologies, he talks about new domains, he talks about innovation, and he continues to inspire youth, right, and millennials. And we recently got to know that Mr. Mahindra also invested in one of the crypto startups as well. So not exactly crypto startup, but a blockchain startups which plans to deal in open blockchains. So I mean, as a person, because since you are part of such a huge group, which is actually one of the most leading groups in India in technology, what is the mood like in the corporate sector in India? Are they having a dialogue with the government that look, the world is moving fast, we need to catch up and we need to interact with these public networks, we cannot ignore them, or if we try to ignore them, we'll be far behind in this space. So there is a dialogue happening? Because what I see in India right now, only the crypto exchanges are fighting for their cause. Only some crypto startups are trying to be vocal on Twitter, but there is not much of action happening from the corporate side. Or am I wrong in thinking on those lines? Can you tell me the exact picture what is happening in India?
Yeah. So in India, so first of all, I don't know the entire picture, of course, but I can talk about my experience in the Indian space. With respect to implementation of the technology, every organization that we work with, be it public or private, which is based in India, headquartered in India, has to obey to the regulations, and they have to figure out how to use the technology in their businesses or in customer experience side, but to ensure that they are still making sure they're not crossing any limits, not hurting anyone in the regulatory space in any way. With respect to investments into innovation, yes, that's been happening for the last 3 years. If you know, we've set up something called the blockchain district in Hyderabad along with the government of Telangana.
Yeah.
And we are actually doing these kind of innovations, which are public blockchain and private blockchain, and we have created policy papers for the governments along with the government officials itself to figure out what would be a good way to approach this. Right? We've also worked in the same way we work with BT. And Srinivas Mahankali, one of the promoter of blockchain inside of BT, has also worked on a paper along with us to say this is how the government should move forward and start accepting cryptocurrencies, and this is the regulation that these other countries are using. We should do something about it, and that's when there have been multiple POCs and pilots that are already conducted, and a lot of outcome that has come from it have been submitted to these central government authorities as well. While if you remember in the early December itself, or somewhere in mid-January, our finance minister also said we don't really want to ban the cryptocurrency, but we just want to make sure people are not adversely affected by some wrong decision making, and there should be some kind of regulatory fence around it so that the end consumer is not impacted. And that's where these outcomes are something that are helping Niti Aayog, that are helping RBI to take a decision on what should be done. Unfortunately, of course, there's a huge pandemic they have to address, and this decision making is getting longer and longer. But I am quite hopeful with the outcomes that we've shown and the kind of policy papers we've already written, and submitted. This is going to move forward. Another good example is the World Economic Forum has something called the Center of Fourth Industrial Revolution in Mumbai, and I'm part of that as well. And we've also written a whole CBDC paper and submitted to Niti Aayog. We've taken learnings from London, we've taken learnings from China, and we've taken learnings from US, consolidated that, and given recommendation to Niti Aayog and RBI on how to look at these kind of currencies. They themselves are very positive, but it will take a little while for them to agree and come to.
Now, this is a very important point. Amey and Tech Mahindra has given a recommendation. Now, I want to understand from you, in your recommendation, have you said that, yes, we need to embrace public blockchains?
Yes, we have.
All right,
yes.
That's amazing.
Private blockchains cannot scale.
Cannot scale. All right.
Private is okay if you want to keep private data into it, but of course, public blockchain is the way for future.
That's amazing. Cal, I'm coming up with a very important question to you. It's a question which
not to cut you on, but there's a little bit of a time thingy as well.
Yeah. This is last question I need to ask from Cal. Abhimanyu. Hello.
Yeah, absolutely.
Okay. Yeah, this is a very important and interesting question. I think this is the question which will set the tone for each one of us. So what is happening? That everybody's talking about stable coins, right? And we all know that USDC and Tether are increasing, right? In terms of adoption, in terms of printing, in terms of the supply, they are increasing. Now, the governments thinks around the world, the government think that sooner or later, fine, let them grow. It is growing in front of their eyes. US is thinking that let them grow. Eventually, one day, we will definitely regulate it and we'll be able to control it. And they can. Because the office of USDC is based out of US. As part of it's being a public blockchain, still, the company, the people who have developed it, they are in US. They can regulate it, and similarly for Tether, they can come up with a regulation around stable coins, and they can regulate it in the supply and the other development side and the other supply side, and they can talk to the developers and sit with them and force them to make some changes, and still they can make changes in those things. what government believes it to be. The other side of it is that the way printing is being done, the fiat is getting printed. Eventually, stable coin is backed by one stable coin, all right, $1, right? So you have a stable coin which is backed by the fiat, and now people, they know that somewhere the value of fiat is going down. So eventually people might migrate from a stable coin, which we believe, which is a popular option right now. People might move to a commodity collateralized stable coin. They might move to a non-collateralized stable coin. They might move to a algorithm based stable coin, or they might move to a stable coin like DAI. So eventually, yes, we can regulate USDC and USDT. We can make some framework around it, but how we are going to regulate stable coins like the coins which are based on algorithms and a coin like DAI? So what are the legal hurdles? What are the regulatory challenges in regulating a stable coin which is based on an algorithm and DAI, and how it is going to shape the future?
Yeah, wow, that's a quick, that's not a quick last question to end on. I mean, look, the reality of it, guys. I'll change the tone just a little bit. Rather than delving deep into this, I'll keep it at 10,000 foot. The reality is this. Look, we're all international. All you have to do is look at this forum, look at the speakers. That is how international crypto is. It touches everybody. The reality is this. If there is a regulatory framework that doesn't work for a specific project, it is going to move. It is that simple. All you have to do is look at Facebook, any major company that doesn't want to do business in the US market in the crypto sense hasn't, and they don't touch it. They don't go there, they don't work with it. And what that means is that there is ultimately a detriment to the US market, as an example. How do you regulate those stable coins, those assets? My point, I guess, would always be this. To a degree, do you really need to? Because the minute you get into that realm, I mean, the underlying asset itself is, in theory, already regulated. So that element of regulation, extra layer of regulation, may not even be needed. So I'm going to leave everybody with that question on their mind. Do you even need to regulate it?
And I was wondering that how to regulate a stable coin based on algorithm. It is backed by nothing.
Yeah.
So right. Thank you very much. Thanks for this amazing panel, and Dotun, Amey, and Cal. Thanks a lot. And I think over to you, Abhimanyu. It was a great session and a great panel. I learned a lot from it.
Thank you so much, Kashif. You always play the role of communicating from a wise mind. So you see both sides of the coin, and that's why the whole community loves you. Always a pleasure to have you. Doing something with you all the time. So that's always in my mind. And thank you so much, Cal, Dotun. Dotun, there's a lot. I see your kiddo playing in the background. Having some fun there too. That's pretty
It's
cool.
a Saturday.
He's waiting for the session to get over.
Absolutely. It's a pleasure, Dotun, Cal, to have you sharing all your minds. Thank you so much for sharing what's been happening in Tech Mahindra and in India as a whole, and your part. How you proposing papers to the government to seek whatever we need to be done at the public blockchain side. But nonetheless, there's still so much to be done. The summers are not over. And if we don't want the summer to be over, we need to keep on working and building hard as we have been in the past few years. Thank you so much, Dotun and Cal and Amey, Kashif, bringing clarity towards how US is poised to play out, and how everyone else can learn from what they're doing and how they're acting fast towards it. Thank you so much.